Welcome back, everybody, to the weekend show. Where I'll be breaking down the big mega cap stocks. So, before we get started, please hit that like button, and that is greatly appreciated. And if you're new here, definitely consider subscribing. Now, if you want to go above and beyond and support the channel, get daily trade ideas, swing trade ideas, definitely head over to Patreon, and that link will be down below in the description for you guys. And now, let's get right into the market. All right, so welcome back once again, guys. And I'm going to start with what's coming this week. Well, there is not a lot, especially when it comes to data. We have some pending home sales and all that, but that's coming on Tuesday. But then when you look at Wednesday, there are actually nothing really going on. We got jobless claims on Thursday, but then only Friday I see some data that can actually move the market. Michigan consumer sentiment, which is the lowest at this point, and even though the S&P 500 at all-time highs. Now, fear and greed index, you can see we're, not too far off from extreme greed, and I would call this even more than extreme greed. Not, the thing that we're seeing in the market. But again, it's 68. Greed is greed, whether it's extreme or not. We're there. Extreme greed or to greed here on this fear and greed index right now. We have a number that's reading at 68. Lots of earnings this week. A couple of big ones to name, like GE, and you got UNH. We also have Tesla, IBM. We got AT&T. We also have Intel on Thursday. So lots of earnings coming out this week. And if you guys want to take a screenshot, go ahead and do that here. Now we can see the futures market. Well, you would think like, okay, market went up the entire week last week, the week before, 13-day streak. And why? Because the war and Strait of Hormuz was getting opened and everything was getting wrapped up. Now, yes, when the same news coming out as a in a positive way that Strait of Hormuz is open and war is getting wrapped up, market goes up big, right? Look at now, it's closed. Oil jumps after Iran and U.S. attack commercial ships as tension escalates over Strait of Hormuz. But look at here, this is the future. Dow is down close to 1%, not even 1%. S&P 0.75, not even 1%. Nasdaq 0.63%. Oil up. You would think like combination, like oil is up over 7%, right? Almost $90 a barrel. You would think that market would drop at least 2%. Same thing happened last week, especially with futures market. Sunday into Monday morning, market was down. But by the time you wake up, it was all gone, smashed. But one thing I want to point out, guys, these are just numbers. Even with good news, the gas prices did not go down. And that is affecting normal people, normal businesses out there, and what these folks are doing. And I'm going to blame even Iran here too. These people are just trading. There was a massive oil trade before Trump and Iranian foreign minister who put out that Strait of Hormuz is open, and then Trump came out and did the same thing, right? The war is pretty much ended, wrapped up. It's not simple as you think that war is wrapped up and we're done. Think about it. Even if Strait of Hormuz is open, how long is going to take for these ships to get back to normal? And especially when it comes to insurance companies that actually insures these vessels, do you think they want to send these vessels through that Strait of Hormuz? What if something happens? Who's gonna pay for it? Not Trump, not Iran, not Israel. So I think out of all this, there's a lot of trading going on, guys, and I would say even Some of these folks are educated from Iran, like people from parliament. These folks are trading also, and this guy is trading definitely. But all his kids, his grandkids, everyone is involved in the market. That's what they're doing. They're here to make money. Trust me, I'm not against anything, but I'm always with the people of the country. Nobody cares about us. Nobody cares about the people. They just care about money. That's all that is, guys. Trust me, that's all that is. Money, money, money. It's not about how much you paying at the pump. It's not about, what job you have, if you have one or not, what kind of economy. It's actually, you have right now. If the economy is suffering or not, they don't care. It's all about money. Look at what happened Friday with that news. Dow was up nearly 2%, gave back a tiny bit. Actually, it was up 2% at one point. Nasdaq up 1.52%, S&P up 1.20%. Russell, think about it. Higher gas prices, higher inflation. Usually, Russell bottoms when there is a lot of rate cuts going on because smaller companies they can borrow money at a cheaper rate, or when it's close or down to zero. Why is Russell going up? Just tell me, why is Russell going up? What is so bullish here on Russell? Nothing. Tech companies, I can get it. Inflation does not really affect tech companies that much. But advancing 71%. We rallied on Friday once again on that same news. But on the same news, how much did the market drop? Well, not even 1%. You can see they're trying to eat that small, tiny mini dip, and you're probably not even going to find that tomorrow morning. Even a 5% drawdown right now, it's just nothing because we went up 12, 13% in just a matter of 13 days. Now, 11 sectors, when you look at it right here, consumer cyclical led the way on Friday, industrials, technology, pretty much everything was in the green, and then energy was suffering, utilities as well. Stock market map, look at here. What do you see? Especially the big names, Apple, Broadcom, Nvidia, Microsoft was up, I think 2%, gave back because this thing is running. I think Microsoft came back up like 17 to 20% already. Google, Meta, and these things are sitting close to all-time highs, some of them hitting all-time highs. This one's sitting at all-time highs. So it's just insane to see how quickly market goes up on a good news, but when there is bad news, it seems like it doesn't care, right? And even market itself usually goes up over time. You want to be bullish in the market, but we have not seen these types of moves in the market in the last 30 years. Nobody have seen. All these traders, including myself, that have been trading for maybe last 15, 20 years, maybe even 25, 30 years. Nobody have seen these types of moves just straight up. So, what is next? Well, I think we need to look at some bigger pictures and see if we can get some sort of a retracement back down going into next week. Let's get started with Microsoft. On Microsoft, it's up 0.60%. So you can see Microsoft came up to where? The weekly 20 SMA, all the way up to 430 plus on Friday, guys. Huge, huge move. And you can see this thing is trading for past couple days outside the Bollinger Band. Now, I was one of those guys who bought and still have, and especially on Microsoft, was recommending that this is a once in a time buying, once in a lifetime buying opportunity. All of us should be green people who bought the dip. But look at the way it's going up. Okay, we found the bottom here. We had this consolidation, and then this one was a failure. We came back in, and since then, gap up and go, gap up and go, and just gapping up. Even this was a gap up too. And how much it moved? From 356 up to $431 a piece. Massive, monster move, right? Didn't even stop halfway, some consolidation, nothing. Just kept going with the market. So if this thing pulls back, you want to watch right about here around 410 to maybe 405. If we get a deeper pullback, maybe into this gap around 395, 394. To the upside, if this thing continues up again, You want to see that 422-ish hold up, and then this thing can go up easily more, especially up to that 438 into even 440 zone. That's totally possible on Microsoft. But if you're a bull on Microsoft and you want to see a nice healthy pullback consolidation and then go up, because when it goes up like this, it can easily give up some of those gains, and you don't want that. So you want the stock to go up in a healthy way, not just straight up, right? The technicals, nothing working. So if there is a pullback, definitely keep an eye on it. A lot of people missed out, did not get into it. So if there is pullback, there is a lot of money sitting on the sideline, and I think people will be all over Microsoft if this thing gets a decent pullback. I would say 400 to 395. That would be a good area to start on Microsoft. On Apple stock is up 2.59%. So you can see Apple came up to 272, just like we talked about it in my video before, backed off, and now just hanging in there at 270. So if we get some sort of a deeper pullback, 265 to 263 would be, really good area to look at as a support. Underneath that, we can possibly dump down to 260 to 259, right down here to this 50 SMA. To the upside, 272 breaks, just like every other big mega cap. This thing can run all the way up to 277 into even 280. On Tesla stock, it's up 3%. So Tesla also had a massive move from 337. That's about what? Almost $80, guys. Huge, huge move. You can see Friday's high 409, and it was going nonstop. And it's not going because Tesla had some great sales or something. Nope. That's how Tesla runs, right? A little bit of good news here and there, some AI news. That's it. It's just gonna pop. And we had this, decent correction pullback here, and now this thing is back on the move. So going into, let's say, tomorrow's session, if we get a pullback down here at 390, 50-day moving average, watch out for that to hold. If not, we can come back down to 379 to 375. That would be also another good area of support. If this thing continues on, watch out over 400. It can possibly come back up and test this area, which is going to be around 432. That's going to be another massive move here on Tesla. On Google stock, it's up nearly 2%. So a couple of things, guys. You can see Google here. We had this, head and shoulder pattern. We broke down, but it did not play out. It's insane how, I mean, look at this. The market cap is over 4 trillion. So I think this is the second largest, the biggest company right now, after Nvidia. And look at the move. We're back to all-time highs. I mean, only $10 away. I would even call this all-time high, right? It's really close. So if this thing continues on, breaks over 342, next stop is 350. We get a pullback into the 5-day, 331 into that support 328. Watch out for that. If we get a deeper pullback, we can fill the gap at 319, 320 here, and maybe even come down a little bit more into this area around 314. On Amazon stock, it's up 0.34%. So Amazon, look at this move. We almost got up to all-time highs, guys. 256. Insane, insane move. Gave back the gains on Friday, almost filling the gap, but we did not fill the gap, which is pretty much exactly at 250. So if this gap fill reversal can hold as a support come tomorrow, then watch out for continuation, possibly into previous all-time highs, and who knows, maybe even get into a brand new all-time high. If this thing breaks below that, we do have support at 248 as well, and the 5-day moving average. Underneath that, you're going to see a drop down to 242, 240, and then we can talk about even 236 to 233.8. This gap down here from, I believe, last week on Tuesday. And this is going to be an indication, if that happens on Amazon, that all the other products, and especially SPY and Qs, they would be coming and filling that gap as well from last Tuesday. But I mean, that's a big move. We can see, it went up really fast. Does not mean that it cannot come down, but the way things are acting, it's very rare to see a big move down here. So I hope we get some sort of a pullback. A lot of money sitting on the sideline. That money can come in, but with a 1% pullback or 1.5, that's just nothing. That's not gonna do anything, guys. On Meta, it's up 1.73%, so monster move to the upside. It's not stopping for anybody. From oversold, now overbought. And you can see 682. We left 682 long time ago on Friday and did not even look back. And now it's sitting at 688. So the continuation can happen. We can possibly come up to this area here, and that's going to be around 772. That breaks, you can go into 738. We have earnings coming out, not this week, but the following week, next week. We do have support at 782. If this thing breaks below that, we could be coming down to 664. And, that would be an opportunity if that happens. But, I have my doubts where, that dip that we are getting, that dip that we got last Monday, unless something really breaks and I see, price action actually breaking down and not holding up in a significant way, that would be a good signal that yes, maybe we get, nice, deeper pullback. And that's where we'll, that money that is sitting on the sideline, not my money only, lot of people, big investors are sitting on the sideline with the money because nobody thought that's going to happen. That actually never took place in the last 30 years, a V shape in the market, and everything just went to the moon within 13 days. On AMD, it's absolutely flat on the day, but look at this closing at all-time highs. I mean, insane. You would think that, this move would come in after earnings, but earnings is next month, and we already had an all-time high. So this big rally was mainly driven by semiconductors and some of these memory chips stocks just going ballistic. All-time highs closing. If we get a pullback, we're just gonna get a retest of 267. 267 does not hold. We can come back down to 258, fill the gap. That would be an area of support to watch, and then maybe down here to 240, 241, maybe even into this gap from last Tuesday, 237 on AMD. On Nvidia stock, it's up 1.68% on Friday, and we're just getting closer and closer to the gap. Earnings next month, but we're almost, I mean, earnings is like 1 month, more than a month away. From tomorrow, it's going to be 1 month, right? But the gap is at 205, so this thing is getting ahead of itself right now. So if we get some sort of a retracement after filling the gap, or if we get under 200, watch out for the support down here, 195 to 196. And only if that gives up, you're going to see a deeper pullback, which is going to be right here at 189 gap fill reversal. And I think that is from also last Tuesday. Continuation over 200, watch out for 203. And then over that, this gap just under 206. On Broadcom, it's up 2%. And one thing I want to point out, as a matter of fact, after Broadcom and Netflix, I'll talk about S&P a little bit here just to give you guys, a hint what can happen next and usually what happens. Let's start with Broadcom. You can see this is the 5 EMA on the weekly time frame, and this is a moving average that's always getting touched. You can see, I mean, this thing will move hand in hand with the price of any stock. Especially, I'm talking about big names and the big ETFs. I'm not talking about penny stocks. They don't matter. You can see this is the 5 EMA, and this is actually the weekly time frame. What happened? We went up this 2 week. We went over, and then we came back in within like another 2 weeks and touched it. So it was at 249, and then we came back down to 220. So $30 drawdown, right? You can see again here, we went up. The third week we came back in on this weekly 5 EMA. Same thing happened here. We came back in. I mean, you can see. I mean, if you look at the history, it's gonna come back in. So where is that right now? Right about 356. Weekly candles definitely bullish, but if we get some sort of a retracement, let's say we come back in halfway, maybe next week we can, come back in, maybe connect with the 5 EMA on the weekly. That's totally possible, right? Now, when you look at the daily, well, we're just riding this 5 EMA to the upside. Gap, 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 all over the place and almost sitting near all-time highs. So basically, the top end would be the previous all-time highs. You can definitely get there. We get a pullback, 387, the gap at 382. These are going to be some critical zones to watch. And I don't see you're going to see, $30 drawdown here on Broadcom unless there is some really bad things happening. So far, market, opening up and realizing that, what took place over the weekend. So it depends on, of course, the technicals does not work at this point it's not working that much. And why? Because everything is happening on a tweet. Tweet comes in, boom, the market moves. uh, when you're looking at the technicals, basically it's not. I mean, this was almost breaking down, possibly coming down and retesting this previous all-time highs. Did we have that? Nope, gone. Right? So technicals, they're definitely not working at this point. So Netflix down about 10%. We had a decent drawdown here with the earnings, but if you want to get involved here, I would say give it like 2, 3, 4 days and see what it does. You don't want to buy here and then you find Netflix down here. So that 94 zone I'm watching closely, and even 97, we held that support. If we cannot hold 94, 97, maybe we get down to 91, 90-ish, that would be a better area to go into Netflix. But if this thing goes up over 100, that would be it. And you just put a stop here and you can play this back up to the gap. So it's simple here on Netflix. Just wait and watch, see if this thing can continue. If not, there is a little bit more downside before this thing bounces back up. All right, guys. So I'm gonna wrap up with SPY here, since I'm not gonna make another update video on stock market. There is so many geniuses out there making videos as a Black Monday is coming. I even saw a tweet on X today. This guy said he called a bunch of investors on Wall Street, and they said Black Monday is coming. And I hope he's right, but you know how that goes. When you turn bearish, market goes the other way. When you turn bullish, like here, I mean, I'm not saying market cannot come in, but when everybody's looking at one thing, it does not happen. Just like the market bounced here, everybody was bearish, right? So, SPY, what do you see? Well, the same thing that I was talking about, especially when it comes to weekly 5 EMA. You can see we came down here. In this case, what happened? We came back up the next week, touching it. So this was a pretty big move. You can see right here, 499. We came back up to what? 443. And this was last year also. We got really disconnected. One candle brought us back to the 5 EMA. You can see as we're coming down, it's touching and coming down as the 5 EMA coming down. Now, does it mean that in this case, the 5 EMA can rise? You can see it right here. It's sitting, where did it go? Right here. So it's just sitting right about 676 to 680, and the price is sitting way above, right? So I can definitely get a correction, a connection here in this case, not a correction. And what's happening on the daily time frame? Well, if you look at it, guys, I mean, this is just insane. Look at this, last April 2025 with tariff, right? Look at what happened here. Okay, we got this, gap down and coming down. We had the bottom and the bounce. The next day, all the gains wiped off. We came all the way down to, what was it, 483. And then the news came out, with the tariff that, we got a deal. Same thing like we are getting right now. We had this $50 move on SPY, massive candle. What happened next day? Well, the same thing. You can see we opened up here, we went lower. So from, look at right here, 542. Look at the bottom of this candle. So we pretty much came down to almost 504 to, I would say, about 500, right? We had this move. We went too far, too fast. From the 5 EMA, we came back in. Then we went up, we came down, we went up, we came back in a little bit here. Even in this case, we went up, came back in. This was the China deal, I believe. We went up and then we came back in, did not fill the gap fully. But my point is here, even on this massive monster move that we have not seen before, market came back in. Well, look at right here. Did the market actually came back in? No, absolutely nothing here. No pullback on hourly, 4 hour, forget about daily, nothing. All these candles are green to, just maybe one session just consolidating and nothing happening. So 13 days of rally, we can definitely take, 3, 4 days of red days. And I think that money that is sitting on the sideline can come in. But if the rally continues, I don't think, I mean, yeah, market can go up. I'm not saying it cannot go up, but the money that is sitting on the sideline, if the FOMO kicks in, if that money gets in, it's gonna get sucked in, and then the market will throw up and market will pull in. So you want to wait. You don't want to buy. I see a lot of people now, especially on X and even on YouTube, all over the place. Oh, we're gonna get a pullback, the gap will reversal. I'm just gonna buy here. And trust me, there's gonna be some action here. And now, when it comes to technicals, another thing I want to point out. So people are saying they're gonna buy it here, previous all-time highs. Maybe worst case scenario, we go down a little bit more, like 693, 694. I'm just gonna buy it there. That's what people are saying right now. On a pullback, I missed out. I'm gonna buy it. The first pullback comes in, I'm gonna buy it. Let me show you guys another thing. This was Dow Jones. Was this a breakout? Just like S&P and Qs and everything else, right? It was. And a lot of people told me the same thing. Oh, this is a breakout. I'm going to buy here. What happened here? Well, we kind of went sideways for a little bit and then boom, right? This was a fake out. Now we're back up, right? So the same thing can happen on SPY. You don't want to buy that first dip. Even if it goes up, market will pull back at some point. You don't want to go and chase it because you missed out. And as far as all these gaps to the downside with low volume, it can happen. It can definitely happen, but that does not mean that. I mean, usually S&P 500 is very efficient with the moves. We're trading outside the monthly expected move for April. We're trading outside the weekly. Last week we have a 2 sigma move. This week it's $10 plus or minus from 710. So 721 and downside I think 699. That's the move. So 699 comes in does not mean that we cannot go lower. We had a 2 standard deviation move last week. So a lot of things you got to take into consideration when it comes to buying the dip, the first dip, because first dip maybe we bounce a little bit and you get excited and then you see a huge red candle like we did here. Like, look at this. You bought the first dip. We actually went higher, but then we dipped again. We came back up, and then boom, all the way down here. So very careful if you're buying the dip. Watch. There's a lot of news technicals. They do work. But again, the man that we have in the office, he's moving the market, guys. You can call him Taco, whatever, whatnot. And the folks in Iran, they're also moving the market. They come out and say Hormuz is open, boom, you're gonna see a 5% gap up. They come out and say Hormuz is closed. That means whoever win after shorting oil on Friday. I think a few folks, and let's have a look at USO. Why? I just wanted to give you guys some more information because look at this. This is a nice hammer type candle. Did we close near the low of the day? No, near high of the day, right? Even though we were down 7%, this was very strong. So we got a gap now at what is it, 124, 123. And if this thing comes back up, I definitely can go higher. And like I said, price at the pump is the main price you're paying. If this thing comes down right here at 72 and you're still paying the same thing that you were paying, when war started, does that makes that oil is cheap? No. So this is just paper, right? The real money is what me and you are spending at the pump. So I hope all that makes sense to you guys, and I'll definitely try to make a video tomorrow night.